Question 991. Which of the following is not a tool used by the Fed to regulate the economy? A. Manipulating interest rates. B. Regulation of the secondary mortgage market. C. Open market operations. D. Reserve requirements. Correct answer is B. Regulation of the secondary mortgage market. The Fed influences the secondary mortgage market through monetary policy, but it does not directly regulate it. Fannie Mae and Freddie Mac, which operate in secondary mortgage market, are regulated by the Federal Housing Finance Agency, FHFA. However, by raising or lowering interest rates, the Fed can slow or stimulate economic activity and control inflation. Open market operations relate to the Fed buying or selling treasury bonds to increase or decrease the total supply of money and also affect interest rates. Reserve requirements determine the level of reserves a bank must hold in comparison to deposit liabilities. This affects how banks make loans, a key element of the economy. Question 992. The following are safety precautions that agents should take, except A. Arrange for new clients to meet them at properties instead of the agent's office. B. Advise sellers to remove valuables from their homes before showing them. C. Whenever possible, work with another agent while showing homes or holding open houses. D. Keep their office informed of their whereabouts and schedule. Correct answer is A. Arrange for new clients to meet them at properties instead of the agent's office. Advise sellers to remove valuables from their homes before showing them. This is a valid safety and security precaution. It helps prevent theft or damage to the seller's personal belongings during open houses or showings when numerous people may be entering the home. Whenever possible, work with another agent while showing homes or holding open houses. This is a recommended safety precaution. Having another person present, especially during open houses or when meeting new clients, provides an extra layer of security and a witness. Keep their office informed of their whereabouts and schedule. This is a recommended safety precaution. Letting someone know your itinerary, who you're meeting, and your expected return time is crucial for accountability and safety in case of an emergency. Arrange for new clients to meet them at properties instead of the agent's office. This is not a safety precaution. In fact, it's generally considered an unsafe practice. It's much safer to meet new clients in a controlled environment like the agent's office or a public place first. This allows the agent to verify the client's identity and establish some rapport before going to a potentially isolated location. Meeting directly at an unfamiliar property, especially a vacant one, can put the agent at greater risk. Question 993. When a property is purchased, a copy of the pest control report must be delivered to the A. Bureau of Real Estate. B. The State Attorney General. C. The Structural Pest Control Board. D. Center for Disease Control. Correct answer is C. The Structural Pest Control Board. When a property is purchased, a copy of the pest control report, often referred to as a wood-destroying pest and organism inspection report, must be delivered to the buyer. This is a crucial disclosure document that informs the buyer about the presence or absence of wood-destroying pests or organisms and any related damage. However, the question asks which entity receives a copy from the options provided. In many states, including California, the pest control company that performs the inspection is also required to file a copy of their report with the state's regulatory board for pest control. This board oversees the licensing and activities of pest control operators and maintains records of inspections performed by their licensees. Question 994. While performing the duties of a listing agent, a real estate broker is liable to third parties for A. His own unlawful acts. B. Acts performed by a cooperating broker who is the seller's sub-agent. C. Only written contracts made under the authority of the principal. D. Illegal actions committed by his or her principal involved in the transaction. Correct answer is A. His own unlawful acts. While a listing broker may have some responsibility for a sub-agent's actions, this is not a blanket liability. Liability typically arises if the listing broker knew or should have known of the sub-agent's misconduct or negligently supervised them. Importantly, a broker's liability extends beyond written contracts to include misrepresentation, negligence, and other wrongful acts. Conversely, a broker is generally not liable for a principal's independent illegal actions, unless they participated in, knew of, or should have known of the activity. Fundamentally, brokers are always liable for their own illegal or negligent actions, regardless of their role. Everyone is responsible for their own conduct. Question 995. Mayor Magruder cast the deciding vote on a zoning decision that made it impossible for a nightclub on a certain street to continue to operate. The zoning change forced the nightclub owner, Oscar, to sell the property. Knowing that, the mayor instructed his broker to offer a lower than market rate price for such a property, which Oscar reluctantly accepted. If Oscar discovers the mayor's role in passing the zoning decision, and can prove it to the court, it is likely Oscar can have the contract declared void according to the legal doctrine of A. Duress, B. Fraud, C. Misrepresentation, D. The contract will be considered valid no matter what Oscar argues. Correct answer is A. Duress. Duress involves unlawful pressure or coercion used to force someone to enter into a contract they would not otherwise agree to. In this scenario, Mayor Magruder used his official position to create a situation, the zoning change, that forced Oscar to sell his property. Then, knowing Oscar was in a vulnerable position, the mayor took advantage of it by offering a below-market price. This constitutes economic duress. The key element here is that the mayor used his power to create a situation where Oscar had no reasonable alternative but to sell, and then exploited that situation for personal gain. This is the essence of duress. Misrepresentation and fraud apply only when someone is led into making a contract on the basis of false information, not applicable on these facts. Question 996. When the monthly payments on an adjustable rate mortgage are not enough to cover interest charges, what occurs is A. A lower loan-to-value ratio, B. Foreclosure by the lender, C. The entire loan balance becomes due, D. Negative amortization. Correct answer is D. Negative amortization. The loan-to-value, LTV, ratio is the loan amount divided by the property's value. Negative amortization actually increases the loan amount, which would increase the LTV ratio, not lower it. Negative amortization can lead to financial difficulties and potentially increase the risk of foreclosure in the long run. It doesn't automatically trigger foreclosure. Foreclosure typically occurs when the borrower defaults on their payments. The entire loan balance becomes due means that the full remaining amount of the loan, including the principal and any accrued interest, must be paid immediately. This is also known as acceleration, not a direct consequence of negative amortization, which can be triggered by default or other specific events outlined in the loan agreement. Negative amortization occurs when the monthly payments on a loan are insufficient to cover the accruing interest. The unpaid interest is then added to the principal balance, causing the loan amount to increase over time instead of decrease. This is a common feature of some adjustable rate mortgages, ARMs, particularly those with low initial teaser rates. Question 997. The requirement for informing the public about the sexual offender database is based on A. Agency disclosure, B. Megan's Law, C. Melrose, D. Statute of limitations. Correct answer is B. Megan's Law. Agency disclosure in real estate refers to the requirement for agents to disclose who they represent in a transaction, buyer, seller, or both. Melrose is a special tax assessment in California used to finance public improvements and services. Statute of limitations is a legal time limit within which a lawsuit may be filed. After the statute of limitations has expired, a lawsuit can no longer be brought to court. Megan's Law is federal legislation that requires law enforcement agencies to make information about registered sex offenders available to the public. The purpose is to increase public safety by providing communities with information about individuals who have been convicted of sex crimes. Megan's Law, named after Megan Kanka, a young girl who was murdered by a previously convicted sex offender. Question 998. A license differs from an easement in the following ways, except: A. It can be terminated at will. B. It is a personal right that cannot run with the land. C. It cannot pass to others. D. It can run with the land and can be passed to others. Correct answer is D. It can run with the land and can be passed to others. A license is a personal, revocable privilege to enter or use another person's property for a specific purpose. It's temporary and doesn't create an interest in the land itself. An easement, on the other hand, is a non-possessory right to use another's land for a specific purpose. It creates an interest in the land and can run with the land, meaning it transfers with the property when it's sold. Question 999. A lender agrees to finance the construction of a subdivision which will comprise 25 homes. The lender advances some of the funds to the developer as building commences, and then a specified additional amount as each home is completed and the construction of a new one begins. The term for such specified additional amounts is: A. Partial payments. B. Obligatory advances. C. Pay as you go. D. Reconveyance funds. Correct answer is B. Obligatory advances. The scenario describes a typical construction loan or development loan. In these types of loans, the lender does not disburse the entire loan amount up front. Instead, funds are released in stages as construction progresses and specific milestones are met. The term for such specified additional amounts advanced by the lender as construction objectives are achieved is obligatory advances. These are funds that the lender is legally obligated to provide to the borrower, developer, as certain conditions or stages of completion outlined in the loan agreement are met. This staggered disbursement method protects the lender by ensuring that funds are tied directly to the increasing value of the property under construction. Question 1000. A broker acting as an agent for a principal can exert as much authority as: A. Detailed by the real estate law. B. The principal actually or ostensibly gives to her. C. The broker asks for. D. As possessed by the agent for the other principal involved in the transaction. Correct answer is B. The principal actually or ostensibly gives to her. Actual authority is the authority that the principal directly grants to the agent. Either expressly, through written or verbal instructions in the agency agreement, or impliedly, authority necessary to carry out the express authority. Ostensible authority, or apparent authority, is the authority that a third party, like a buyer or seller, reasonably believes the agent has, based on the principal's words, conduct, or inaction. Even if the principal didn't explicitly grant this authority, they may be bound by the agent's actions if they led a third party to reasonably believe the agent had the power to act. The agent's power to bind the principal always stems from the principal's actions or declarations, not from the agent's own desires or external laws defining general brokerage activities.